Traders want to make good decisions, but sometimes in order to make good decisions, they think they need a lot of factors, and they want to make a good decision and feel good about it because there's a lot of factors that have put into it, and a lot of consideration and a lot of variables. But sometimes having too many variables would just lead to paralysis. And at some point, knowing everything doesn't help performance, and adding variables, indicators, time frames, at some point, it's just going to just paralyze you and just make you doubt yourself. So what you have to realize that as a trader, when you enter a trade, at that point in time, you cannot possibly know everything and factor in everything into that trade. You just need to know enough to make a good decision. Let me step away for a minute outside the realm of trading to explain how it works. Think about a pilot. There are really good pilots out there that their job is to navigate an airplane, whether manually or using the automated system they have, from one place to the other. I'm sure they know a lot about the airplane. I'm sure they know a lot of things about factors such as aerodynamic. They know how the airplane fuel system works, but they cannot fix an engine. That's not their job. They don't know everything as far as fixing an engine. Maybe there's a pilot who can, but essentially it's not their job. The fuel system inside the airplane, maybe they would know theoretically how it works, yet they would not be able to put it together. But they still have enough knowledge to take the airplane from one place to the other. Think about a chef. He uses a blender, right? He puts the ingredients in the blender. It doesn't mean that he has to know, what electricity runs through the blender, what pace it's cutting it at. It's not of his concern. He just wants to mix some things together, and he knows how the taste would work. Even a doctor relies on certain equipment out there to give him information. How it retrieves the data, they might understand the logic, but doesn't mean that they could put it together. And traders have to think along the same lines, that at some point enough is enough. Like, enough information is there to make a decision. Why am I sharing this with you? Because quite often people ask me, do you think I should add this and that? I should add this software. I should add this indicator. I have a different charting system than your own. Should I look at that? And all I can say is that, look, if it helps you make a better decision, sure, you can add it. But many times I think that traders just want to convince themselves that the decision that they will make will be so much better if they have everything around them. And I don't think it helps. I think you have to minimize, right? I mean, look at it like, building some sort of a sculpture, right? You start with a rock and you remove the rock. That's what you do. You don't add rock to create a form. You reduce rock to create a form. And it has to work along the same lines. Look, at the end of the day, you are in the marketplace to answer three major questions, right? You have to answer, why do I get in? Why do I get out? And where do I get out where I'm wrong? So again, you want to emphasize your point of entry, you want to choose your point of exit, and you want to choose the point that you're wrong, right? So those are the three things that would essentially make a trade. Either you have a loss or you have a win. Now, here is something to consider, okay? It might sound a little bit counterintuitive, but just stay with me for a minute. Let's say there's somebody out there, okay, in some sort of a hedge fund, right? Like a really smart kid with a PhD. And he uses some sort of a statistical method, right, to enter a trade. And you, on the other hand, you use just the moving averages and maybe an RSI and a MACD, whatever the typical charting system there is out there, right? So if I was to ask somebody who has the better odds as when they enter the market, whether they go long or they go short, right? So I will tell you that this is really a trick question, because in reality, once you enter the market, everybody has a different reason. He has his own statistical analysis method, which is a method, and he could be very smart in what he's doing. And you have your own method that you enter the market. What really dictates the performance in the long run is really the risk management, not always necessarily the entry point. If you used, 15,000 variables, exaggerating, okay, fine. Let's say you use 10 variables that you need to enter the market. I will tell you sometimes it would be too much. And it does not make you any better than someone that entered with 3 variables that make him trade the market, right? So whatever they are. So at some point you just have to kind of acknowledge to yourself and saying, what are the most basic tools that help me make a decision here? What would help me make a decision to get into the market? What would help me, to exit the market? And what tools can I use to tell me that I'm wrong? And that's basically it. And you narrow it down to that. Now, over time, there's nothing wrong with, let's say, adding a variable. But if it didn't improve your performance, don't add another variable and another variable. That won't help. Maybe you just have to remove variables instead. So let's say you started with 2 and you add a third one and it's working better. Fantastic. Keep on using it. If you add a fourth one and it doesn't make it any better, it creates damage or just didn't add anything to performance, remove it, because now you have less things to look at and you're getting less distracted. Now, I think, and again, this is just my theory. I don't know if I'm right or wrong because it's very hard to figure out human psychology. But I think that some people are so afraid to trade the market that they subconsciously add all kinds of filters in order to tell themselves that there is no trade because it didn't meet all their criteria. So they're purposely creating some sort of a block for their trading, and essentially they don't take any decisions. Now, it's not that they are always aware that they're doing it, but they live with a lot of kind of, I would say, regret, because they could have taken trades, maybe they could have gained from the trades. I don't know, but I think that's really the reality of it, of people saying, I'm not ready yet because I didn't build my system yet, and I need all those variables and everything else, they're not there yet. I'm just building my tools. Like some people would tell me, well, Matt, before I open an account with you, I want to look at all your videos, right? Or I want to listen to all your podcasts. They will help you, no doubt. I'm trying to give you information that would help you make better decisions, but at the same time, you will be your own best teacher if you become conscious of what you do. So again, one thing I want to emphasize here in this podcast is that if you have a good number of variables, trust them, go ahead, trade with them, see what they do, and essentially make your conclusions from there. You could have 3 or 4 variables. Maybe you remove one, put something else, then you remove something else and you put it in just in case it doesn't work. And if it works, then it just works, right? So again, don't think for a minute that somebody out there, so-called full-time trader, has some sort of a variable out there that you didn't consider and didn't find yet. You can trade with one monitor. It's fine. With chart and order execution, it's fine. You can trade with 2 monitors. But don't think for a minute that somebody has 3, 4, 5, 6, 7 monitors has any advantage over anyone. If they feel comfortable working in that environment, that is fine. This is how they make their decisions. But don't think for a minute having, indicators all over the place with 7, 8 7 or 8 indicators on seven or 8 monitors gives you some sort of an advantage over somebody who has just one monitor and has a very simple system. And that's really the beauty of trading. Everybody talks about it in terms of discovering this system or a holy grail and everything else. People throwing out usually beginners throw those terms out there. There's a method for every season, and you can pretty much build everything you want. But and they exaggerate, of course, with all those descriptions. But one thing they negate to describe is really simplicity, right? Just having the right number of factors that would make you take a trade. So again, if you're right now a beginner trader and you doubt yourself, you have something that you like and it works for you and you feel comfortable with it, and then you see some sort of a thing out there, where maybe somebody who calls out proprietary indicators or additional software or that works in tandem with your method, you would find that 99% of the time, and again, this is just my opinion, and I have to state that. This is just my opinion, so it doesn't mean that it would apply to everyone. I'm talking from my practical experience. But I would say to 99% of the people, adding those tools will not help. You have to go back always to basics. And again, the most important thing in this whole trading thing is making decisions and risk management. This is the business you're in. You're in the business of making decisions and risk management. And in order to make a decision, it does not mean that you can factor in everything. At some point, whether it's life or whether it's trading, when you make a decision, you do not know the future. People would like to think that there's somebody out there that, knows the future. This is why you have a lot of newsletters out there. This is why you have the analysts out there and people listen to them, because humans would like to think that somebody out there in this, complex world has figured out something about the future. But nobody knows the future. And even if they predict the future, it might not come in the shape or form that they predicted it. So the minute you enter a trade, that's the time that you start managing it. That's the time that everybody starts managing it. Whether you're a hedge fund, a money manager, a beginner trader, that's where your job begins. Your job actually begins when you enter the trade. What you do before the trade is a preparation, right? There's all those factors that you have to take into consideration. Again, you want to make a sound decision. I get it, but don't think that while the trade is occurring, especially in futures market, when things move really, really fast and you have to be fast on the trigger to take advantage of an opportunity, don't think that you can sit there and just look through gazillion things. You don't want to be impulsive, right? The one thing you don't want to do is be impulsive. But at the same time, you don't want to look at 1,000 things, especially sometimes people get stuff that they don't understand. They really get stuff that is complex and they don't get it. They don't know how to analyze it. They look at it. Maybe they bought it, so they pretend that they know it, but they're really just staring at it, right? They're like, what the hell is this thing that I got, right? I mean, that's what their mind is telling them, but but they refuse to believe it and they try to find some practical use to that. If you made a mistake, you bought some garbage out there that you don't need. Well, I shouldn't call it garbage. One man's garbage is another man's treasure. But I'm saying if what you see it as some sort of an unuseful tool, then just you don't have to use it, right? You made a mistake. You thought it's going to help you. Fine. We all did that. I for sure, made in my early days, bought all kinds of resources that I thought are going to help me. But obviously they did very little to improve my knowledge of trading. So I obviously don't want you to go through the same thing. So that's basically it. Keep it simple, right? That's the idea of keeping it simple. The idea of keeping it simple means that you have a reasonable number of factors that tells you when to get in and when to get out, right? That's it. I hope you enjoyed this podcast. I wish you a great day, a great week. If you're listening to this close to the weekend, I wish you a phenomenal weekend. And just to remind everyone that futures trading is very risky. There's a substantial risk of loss in futures trading. Past performance is not indicative of future results. Please trade only risk capital. Since I mentioned platforms on this podcast, check out our platform called Optimus Flow. That's our flagship platform. We like it very much. Again, if you go to our site, you'll see that we have many platforms, so we respect people's choices. But the one thing I wanted to tell you that we keep on adding features to Optimus Flow. There is a free version, there is a paid version, but we keep on adding tools that we think would help customers in terms of trading decisions and risk management. That's my job. That's my goal with this platform. You just add the kind of tools that I think would help traders substantially. Please also go to our website. It's www.optimusfutures.com, and you can get in touch with us by calling us at 1-800-771-6748. If you're outside of the United States, please call us at 561-367-8686. I wish you all the best. Thank you for listening to this podcast, and I'll catch you on the next podcast. Take care. Bye-bye.